Hello, I'm Victor Adair, and I'm here on behalf of HowStreet.com. We're in Vancouver. It's the second week of June 2009, and my guest now is Eric Coffin. He and his brother David write an advisory service about the mining companies in particular. The website is hraadvisory.com. Eric, thanks for taking the time with us.
Thanks for asking, Vic.
Spoke with your brother. Your brother goes out and looks at the mining sites and that sort of thing. Looks at maybe more of the geology. You look more at the finance.
Yes.
But I know it's not just the financing of the mining companies. You try to get an assessment as to where the economy is at, where the broader markets are at. Obviously, that has an impact. And putting what he does together with what you do, you recommend to your subscribers about what shares, what companies to buy and to sell.
Exactly.
Okay, so let's talk about it. We had a tremendous crash in the commodities beginning about summer of last year.
Yeah.
So the shares, a lot of mining companies really got beat up badly. They've come back since then. What did you see happening, say, during the crash that may have taught you something, or that you can look ahead with a little more confidence as to with your recommendations?
Well, I mean, I think one thing I learned, I don't want to be on the wrong side of Hank Paulson. Essentially last summer, I think Washington saw something really bad coming. There was a financial tsunami on the way. They knew they were going to have to finance hard with treasuries. He and Bernanke went out of their way to basically light a fire under the dollar. There were, like any part of the metal market, like any equity market, I mean, there are guys who go in and buy the metal because they're going to use it. There's also a lot of guys who trade it, especially on the future side. And the future price, of course, as you know, obviously impacts the spot. When that happened, essentially there were more speculative funds that owned metal. They were out the door almost immediately as soon as the dollar really started to move. The other thing that we saw that I don't think I've seen before, that we saw this time around, and it's really a measure of how bad the credit crisis was. It's not so much a measure of how bad mining companies were doing, because it was actually at the other end of the supply chain. You were seeing companies, and this is buyers, say guys that make piping or tubing or wire or whatever, guys that buy the zinc or buy the copper, buy the nickel. There was an appreciable amount of metal coming back into the London exchange in particular from these companies, and it was essentially vendor financing. I mean, these were guys who weren't doing that badly, but their bank was in trouble, so they were having trouble getting more credit, or maybe their credit line got cut, and there was actually metal getting sold sort of as a last ditch form of financing, because the thing with a place like the London exchange, as long as you've got approved metal, if it meets the criteria of the exchange, I mean, you know what you can sell it for. You phone your broker, copper's $1.98 today, I've got 10,000 tons, get rid of it. It's done, you get paid 3 days later.
Eric, I understand, looking at your letter, that you have been, for the past few months, having people long in the metal stocks, but that you are now starting to take some profits. Tell me why you think that way, from the financial perspective of how you look at the market.
As much as anything, short term, it's really, I guess you could say it's market sentiment. These things have had a pretty big run. We do have some concerns that the major markets they're feeling pretty toppy right now. Normally when you've gone through any kind of a 55-60% crash like we just had, every example I went back and looked at, and they weren't all end of the world depressions. 2001, for instance, the last big bear market, if you look at what the market did then, I mean, it revisited the low a couple of times. It hasn't done that yet. The one caveat I've got is this has actually been a bigger up move, quite a bit percentage-wise, a bigger up move than you saw in 2002. So, maybe it holds this time. I'm not convinced it's actually going to go right back to the lows in March, but I do think the odds of getting, 10 or 15 or 20% shaved off through the summer are fairly good. And, in that kind of situation, people are going to take profits on stuff. And whenever people see the market starts to worry people, they tend to worry about, what they consider the basic demand goods like base metals first. So, I mean, that's the stuff you'll see people taking profits in, so we just want our guys to do it first. That's not to say that we think they should sell everything, and it's quite conceivable that 2 months from now we'll be saying, okay, everybody back in the pool. It's quite likely, actually.
Well, we're talking with Eric Coffin. hraadvisory.com is the website. we're talking about, we had the big crash. We had, I think the crash exacerbated by people forced selling. You were talking about that. What caused you, going back a month or two or three, more than that maybe, to step in as a buyer in the face of devastatingly negative sentiment and very sharp declines? Did you just think it was a bottom, or was there some trigger that got you wanting to be a buyer?
We thought it was. I mean, we thought it was a bottom. I mean, gold. Gold was getting sold as insurance, but we could see, we took a look at what was going on in the U.S. in terms of what the Fed and the Treasury had to do. That gave us a bit of comfort on the gold side at first, because essentially right now, I mean, the way I view things, I don't see any choice for the Fed. There's really no road for them to follow but large-scale monetary expansion. And it's not, a lot of guys have been jumping up and down about this on the sort of the gold bug side, if you will. David and Eric gold bugs. It's just another metal we follow, but it's not really about. It's not about inflation so much. The problem they have right now is they got to sell so much paper that the Fed has to be the bid under the Treasury market. If they're not the bid under the Treasury market, with the amount of notes they've got to sell in the next year, there's very serious danger of the interest rates just getting away from them. So basically, they're just going to keep pumping money into the system. The transaction that has them be a bid under the Treasury, going out to buy bonds, that's an inflationary transaction. They create money when they do that. So we were comfortable about that. We looked at some of the base metal companies, ones we follow, and they were, a lot of these things got sold down 90%. And like I mentioned, the copper price, it went from 60 cents to $4. It didn't go back to 60 cents. It went back to $1.25, bounced. Most of these guys have 20, 30, 40% of their output hedged at $2.50, $3. I mean, the bottom line was, most of them were in quite good shape in a balance sheet sense. They were making money. I can remember being at a conference in February, and everybody sort of hit under the table when they asked about base metals. And I mentioned a couple of stocks we follow and said, like, these guys just put out great quarters. 2009 won't be obviously as good as 2008, but these guys are not going to be losing money. And they have tons of money, and they have no debt. I mean, why are you guys afraid of these things at 10% of last year's price? They're a steal.
Let's do a 30-second wrap up. You've been taking profits on your copper stocks. I understand you like the gold market right now, gold mining shares instead of the gold itself. You got 30 seconds to tell me what you see there. What do you like about that?
Gold's close to $1,000. I mean, it's had trouble going through that. I suspect there's going to be more bouncing around. The important thing for us, when you're looking at, especially if you go down the food chain a little bit, development companies, explorers, negative cash flow businesses, financing is the lifeblood of the entire industry. Bottom line, for the industry to do well, they got to be able to raise money. The biggest encouragement I've seen, it's not just the gold price. We're seeing a lot of money get raised, and every month it's going a little bit down the food chain. Companies with a slightly less advanced properties are getting financings done, and really that guarantees news flow, and news flow is basically what makes a market happen. It's not, things aren't wonderful, but I think we may have a pretty decent summer on the gold side.
We've been talking with Eric Coffin. He and his brother David are the publishers of the HRA Advisory Services, the website hraadvisory.com. I'm Victor Adair on behalf of HowStreet.com. Thank you very much for watching.
Comments made on How Street Video and HowStreet.com are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at HowStreet.com. How Street Video is a production of How Street Media Incorporated.